Awesome, so you've seen a real-time print and you've kind of looked at how to actually tell whether or not you should go up or you should go down, and you sort of got an introduction to figuring out price levels based off of the price level of the really big order. So sort of figuring out, you know, if it's at 174.5, maybe we should look at 174, 175 and see which price it breaks. So super cool, foundational basic stuff there, really awesome. Now we're gonna look at late buy prints, which are pretty cool, and we're gonna look at application of these in sort of timing the overall market. And I want to kind of put a caveat on this before we get into it, because I was watching like CNBC yesterday with my dad, and you know, there are these guys and they're trying to trade like call options on the SPY and on the S&P 500, and I'm like, dude, why are you doing that? Because in all reality, and you guys freaking know this, like you can make literally 10, 20, 30 times more with the exact same amount of effort just making investments on individual stocks that are more likely to actually succeed. Because guys, you freaking know this, like the market is just not really, you can make a lot of money trying to time. But individual stocks can freaking crush it. When we look at this example, just kind of understand that like a lot of these big institutions are trading the big markets. They're trading stuff like the NASDAQ. They're trading stuff like the S&P or the Dow. And that's just where a lot of the money is. Most of the money for you and most of the money for most people, you know, most of the percent gains, most of the actual growth is in individual positions and is in dark pool prints on individual positions. Kind of like maybe a little bit smaller than Facebook, but definitely on individual positions. And when I say smaller, I don't mean price. What I mean is market cap. What I mean is float, right? So you want to see lower floats, lower market caps, and those are ones that are going to move more quickly and respond better to these dark pool prints. So just a cool kind of overarching thing to understand there, because this example again is with the SPY, with the SPY index fund. You're not gonna freaking move the market even if you sell hundreds of millions of dollars, considering that there are like billions, trillions of dollars. You know, if you think about it, like, you know, say this is the entire S&P 500, and then say you're looking at a trade on this, you're actually trying to get into it, right? Like if you put in an order, you know, just like maybe 1 or 2 or 3% of the market, like you're not actually gonna move it that much. Even if 3% of the market is hundreds of millions of dollars, it's just not gonna have that big of an impact on everybody else. But if you think about maybe a smaller investment, smaller stock, right? But not just volume, but float, right? Like there's less shares tradable. If there's significantly less shares tradable and you put in an order that is like, you know, half of what normally happens, like that's gonna have a really big impact, and it's gonna create a huge movement. And so that's really the goal, right? Is to take advantage of these huge movements and make a bunch of bank by leveraging them, rather than trying to maybe trade like small little increments over here. Like this is really not where the money is at. The money is at the individual positions that are going to have sort of bigger moves that you can actually accurately predict and minimize your risk on by using the price levels based on the actual print, right? So again, with our example with, you know, any company, if say there's this, you know, 1 million shares get traded at like $30.50, and so you're looking at like maybe $31 as a buy and $30 as a short. Like if you buy at 30, your stop loss, or if you buy at 31, like your stop loss should be at like 30, 50, 30, 40, you know, aggressively 30. And then you would obviously want to use technical analysis to understand maybe where your upside is, right? So wherever the upside is, you want to sort of understand where that upside is. I have a trade just like this going on right now with AMD. I mean, it's the same thing, right? There was a really big dark pool print 31 or 39, 5. And so now like the idea is you want to see the price go down a whole bunch, at least for me, because it's up a whole lot right now. And so like you would have price levels at 40 and a price level at sort of like 39. And this is sort of more of a real-time print, not a late buy print, but it's the same concept, right? So they go under 39, you know, they're like 38 right now. So I buy like puts for 39, and you would stop out of those if it hits 40, which you probably won't, but even if it does, you're still gonna have that huge reversal, which is kind of cool just based on the technical analysis of it, you know, as of right now. And then the target on that is like 30 bucks. Target on that's like 25 bucks. So you have like a lot of upside. You're looking at very little downside. Obviously it depends on whether you do options or just like normal stock. But that's sort of the key foundation going into this, is you want to kind of understand exactly what you're trading. AMD is a much smaller, you know, it's got so much less shares tradable than the freaking S&P 500. And because of that, it's gonna have hundreds of times more upside than the S&P. So definitely a cool little like key concept to understand here, and some cool stocks too. I mean, AMD, like I've traded AMD so much. In one of my first investments, they freaking tripled, which is really, really nice. So let's get back over here to late buy print. Now, what's cool about these trades, these investments on the S&P and on the market, or these kind of happen sort of in like an election season, right? So election season is usually like a really, really volatile time period. If you guys have held through any kind of, you know, shift in power or, you know, new elections, like usually the market, like everything gets screwed over. Like at least the big indices, you know, they have massive swings in election season. People are selling because they're like, the world's gonna end. People are buying because they're like, yay, new president. Most of the time, it's to the downside. At least historically, like you'll see like there's an election night and the market will drop like 5 or 10%. And it's not a big deal, like, because again, the money's in individual positions. Something's kind of pointing out here is that it really didn't matter who won the election. What actually mattered more was what big guys on Wall Street were doing, because they sort of determined how the market actually moved. And the way they did that was by using huge trades in dark pools, right? Write it in white, but I mean, that's the point, right? That's the foundation. What she saw on November 7th when she was looking at this trade at $208.48. When you see this, you want to kind of figure out what else is going to happen, because especially with like big indices, when you have like one dark pool print, usually what she says is that you have more and more and more and more. So they'll come in after you see that first one, they keep kind of coming in like cockroaches, right? It's not just one, it's a bunch, right? She sees a ton more at like 4 in the afternoon after that. I mean, she kind of has this picture. You guys got the book. You can go to page 30. You can see they're like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 20, like tons and like 2 dozen of these dark pool orders. And these are for like 500,000 shares, a million shares, 700,000, like these are really, really 900,000 shares. I mean, you think about 900,000, a million times 208, $200 million times like 10, you're looking at, you know, literally like $2 billion, $4 billion getting traded right here. It's the end. All of these, so all of these orders, right? And I'll kind of write out sort of the volume here. So you've got like 100,000, you've got 500,000, 500,000, you have a million. Just like there's like, you know, tons of these, so I don't want to write like all of them down, but they're just really, really big orders. Most of them are 500,000. Most of them are 500,000, 501,000. A lot of these, like just a lot of these, and every single order is executed at the exact same price, and that's how you can kind of tell that like this is the same person doing this. Every single order is at 208.48.22. Every single order is at 208.48.22. 48.22. 208.48. Oh, there's one that's at like 208.45. Oh wait, no, that's a different order. Yeah, they're all 208.48.22. So you can see that like somebody's trading a lot of these shares. And this again is sort of like right before the election. 9 million shares on a $200 stock. I mean, that's a lot of money. Say 10 million for easy math, times 200, you're looking basically at $2 billion, which is a lot. Now, here's the interesting thing. So you guys know like candlesticks, right? You've got the open, the high, the low, and the close, and then, you know, that's what makes the candlestick for the day, right? So you got your daily candlestick here. What's interesting here is the high of the day was 213.19, and the low of the day was 211.30. And then the open and the close, and it was a red candle, so you opened at 211.30, or 211.45, my bad. And you closed at 213, oh wait, that's wrong. 213's up here, so it was a green candle, 213.15, and it opened at 211.45. So you can see the trading range from this day was about 211 to 213, then it closed really, really high. I don't know if you guys can see this, but you don't have to be a genius at math to see what's going on here. These trades are outside of the trading range for the actual day, which means that these orders had to be executed the day before or before that, because this price had never been at 208. This was not at 208. The low of the day was 211.30. And so this obviously had occurred far before it was actually reported. And that's how you know that it's a late buy print. It's a late buy print because the price is way above what these guys actually paid for. And you can tell that by looking at the open, high, low, close of the day, which is kind of what you see here, are that these guys are buying at a price is literally inaccessible entire market. It didn't matter who won the election. Like, this is a really, 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 really big bullish sign, because if you pour $9 billion, $10 billion, or $2 billion into a investment, and so here's the actual chart of what happened with it. Super, super cool. You can kind of see bought right here, and it just went straight up. And I'll kind of draw it for you so you guys can see it again digitally. But really, really, really powerful setup here. You're looking at, you know, 210 right here, and then 240 up here. So again, you know, maybe a 15% move, not a massive move, just because, you know, the market's not gonna move huge amount. But you've got your buy print right here at 208, and then as soon as that happens, it just goes straight up to this 240 price target. In the span of about 2 or 3 or 4 months. 15% over a couple of months, not necessarily the kind of returns that I'm looking for. Pretty low, but you can see the power that this one, you know, series of big dark pool orders had. It actually had the power to go in and reverse this setup, reverse this pattern. Another really important thing to notice here is that there was a big red, not a red volume, just a really big volume candle right here, because obviously they're trading, you know, hundreds of millions of hundreds of thousands of shares, millions and millions of shares. So that's gonna spike the volume. So you definitely want to look for those spikes in volume, because those spikes in volume are gonna show you that there's actually support behind a movement, and then hopefully reversal potential, which is exactly what happened in this trade and in this investment. Is it reversed based not off of the election or some crap about politics, but it reversed because people on Wall Street, and we'll talk more about this idea of 501,000 shares later, people on Wall Street were pumping all their money into the S&P, right? And so if you know, 40% of the market is buying something, 50% of the market is buying something, then it's probably gonna freaking go up. And that's exactly what happened here. Is there were these massive series of orders, these massive series of dark pool trades, and they led to a huge increase based off of, again, this concept of a late buy print, right? You're looking at the price that's actually over the execution price, which means that it's been hidden for an entire day. They're hiding it so that they can get completely filled, because they want to make sure that they buy right at the bottom. Because for them, like, they got in right at the bottom because they're freaking geniuses, but also most significantly, because they can actually move the market based on how many shares they're trading. Again, price is based on supply and demand, buyers and sellers. And so if they're able to buy a whole bunch at once at one price and buy up all the supply, and there's still a lot of demand, then it's just natural economics that the price goes up. So yeah, that's the foundation. Really cool example here, and also a cool way where, like, you would have thought it was maybe the election that caused volatility, or you thought maybe it was like whoever won the election, like, being the reason that the market went up. But in reality, it was actually just painted out right here in plain numbers in the dark pools, which is pretty cool. And they're not difficult numbers. You don't have to do any math. All you have to do is look at this and realize, oh crap, somebody just bought $2 billion worth of stock. Maybe I should look at what they just bought it at and look at the actual price. So yeah, cool stuff. Some pretty basic fundamentals here, but definitely some really cool examples, and cool stuff. So thank you guys so much for watching. I hope you get a ton of value out of this module. Go out there, apply it, absolutely crush it, and I will see you in the next module. Thank you. Bye.